Let's turn our attention to the company most people likely have not heard about, but I can tell you it has been buzzing around the hallways here at Fool HQ. I've heard so much about this company, so it's been on my list to actually do a show with you, Brian, on this company. That company is none other than Shockwave Medical. That's ticker symbol SWAV, SWAV for our listeners out there. Brian, despite its performance since it debuted on the market, this really still is a company that just hasn't gotten enough investor attention, investor love, I think. What can you tell us about its debut on the market a little bit earlier this year and why you became interested in the stock?
Yeah, so and that makes sense. So for listeners, this is a company that came public in March of this year, and that is right in the time when Pinterest, Lyft, Uber, Beyond Meat. I mean, we've been spoiled with the number of IPOs we have. So it makes complete sense how this company, which should have gotten a little bit more fanfare, has been just kind of brushed aside. But this company has been just red hot. They came IPO, their IPO priced at 17, which was above their range, and they're currently trading about 58. So this has been quadruple since a triple since it came public. And to answer your question, the reason that this company was on my radar at all was because another company, medical device company that I deeply admire, Abiomed, we've talked about them on the show before. They actually took an equity position in this company prior to its IPO, and they also helped get the IPO going. And these two businesses are now working together. So getting the thumbs up from a proven market winner like Abiomed was a big vote of confidence for this company in my book.
Yeah, let's talk about their tech. What's amazing to me with Shockwave Medical is not necessarily that they invented something new. Rather, they took really two different types of tech, put it together as one, and they've had some pretty astonishing results, to say the least. What can you tell us about how their tech works, and particularly how it can address many of the needs related to heart disease?
So Shockwave is focused on the cardiovascular disease market. So they sell an intravascular system that makes use of technology that has been around for decades called lithotripsy. So millions of people in America and around the world have developed fatty deposits in their arteries. And that can cause all kinds of problems that restricts blood flow and doesn't allow blood to circulate around the body. So when this happens, a very common procedure is to use angioplasty, which is when a tiny balloon is inserted through a catheter into the blocked artery, and then it's inflated to widen the artery at the point of the blockage and restore blood flow. Now, that technology has been around for a long time. It works very well. However, in about 30% of cases, the plaque that's blocking the artery becomes calcified, so it becomes like basically rock hard. In those situations, normal balloons don't work. So doctors have to use either very high pressure balloons, or they even insert balloons that have blades in them to literally cut out, to score the inside of the arteries to relieve the extreme pressure from that calcium. And in very tough cases, they actually, in very blocked cases where the calcium is just everywhere, they actually use a miniaturized drill to be inserted into the artery to literally drill out the calcium. As you can imagine, using scoring and a drill can be very risky, because not only can it damage the artery wall, but it can also cause debris and the calcium to be shed out and go into the bloodstream, and that can cause problems for the patient both upstream and downstream. So Shockwave has a innovative solution here. So they use a technology called lithotripsy, which has been used to break apart kidney stones for decades in patients. And what they do is they developed a device that is inserted with a balloon directly into the impacted artery. And then the device creates small sonic waves that actually break up the calcium deposits in the hardened arteries, while leaving all of the soft tissue that's around it unharmed. So these sonic waves actually break up the calcium and allow blood flow to be restored in a much safer manner.
I think we should retitle this show All About Physics. It's really the simplicity of physics. I mean, you're talking about sonic waves. I mean, you're talking about with Novacure electricity. It's amazing to me the simplicity of tech that's already out there is now being applied in an innovative way for just huge needs. Sometimes it's not about, the expensive, gene therapy that costs, over, $1 billion. But anyway, it comes down to the simplicity of technology, and that's what this company is all about. But really, it's their business model that also is really intriguing because they've got some reoccurring revenue streams that are built in as well.
Yeah. So Shockwave basically sells 3 devices. So they sell the device itself, which is the lithotripsy generator, which is about the size of an Xbox, plugs right into the wall. Then that connects to a connector cable that powers the actual catheter, and then Shockwave also sells the disposable catheter as well. So there is, this company is still pretty small from the revenue standpoint, but down the road, as those catheters get used more and more, they are disposed of after each treatment. So the business model will have a recurring revenue component built into it kind of over time, and that just makes me excited as an investor. And to quickly put some numbers behind what this company has done, still very, very early on here in the stage. So last year, the total revenue for the full year was just over $12 million. But thankfully, that number is growing extremely quickly as more and more providers grow used to this technology. Last quarter, their revenue actually jumped 450% to over $7 million. And they expect revenue for the full year to just about triple over 2018. So growing very fast.
So I've seen some analysts pegging Shockwave's top line potentially surpassing $250 million by 2023, about a 20-fold increase over the next 4 to 5 years. Brian, where is this coming from?
Yeah, so the big thing for investors to look at with any new technology is, okay, what's the potential here? So where they are at the beginning is hopefully, where they could be in the end is hopefully much bigger than where they are right now. So they currently have regulatory approval to treat peripheral artery disease with this device, which is when blood flow is restricted in the limbs, and that's usually in the leg. They have approval for this both in the U.S. and in Europe. And management pegs that opportunity there at about a $1.7 billion market. Now, a couple other indications down the road that could expand that number significantly. So right now they do have the approval in Europe to treat coronary artery disease, which is the arteries that supply the heart with blood. So you can use Shockwave device on that. In Europe, and they are currently marching down the path to get the approval there in the U.S. too. If everything goes well there, that could be another $2 billion opportunity for the business. And then finally, another area that they think that this technology could be applied to is a treatment for aortic stenosis, which is the heart valves themselves when they become calcified. So the heart valves can become narrowed and obstruct blood flow. And if they can win approval for that indication, that would add another $3 billion market on top of everything we already talked about. So the numbers here could be huge in time.
So Shockwave right now is trading at about $58 a share, has a market cap of about $1.6 billion. Brian, on the one hand, I think as an investor, this is insanely expensive, especially looking at the revenues that you just mentioned earlier. On the other hand, though, you laid out the case for the total addressable market, which is key for any investor to be aware of. I mean, just in those indications alone, even if they only capture a small percentage of those therapeutic indications moving forward, I have to step back and think now could actually be the best time to get in on this stock, especially ahead of those multi-billion-dollar indications.
Yeah, there's no doubt that buying this stock today is a bitter pill to swallow. I mean, like you said, revenue is expected to be about 33 to 36 million for the full year, and they're trading at $1.6 billion. So literally 50 times full year revenue estimates. That is a enormous premium. So but when we talked about, it makes sense why Wall Street has such high hopes for this business. Not only are they going down a potentially huge market, but they're already showing extremely fast growth. So when Wall Street gets excited like that, the stocks can just soar. But the thing for investors to know is that this is going to be a volatile stock. I mean, this is priced at such a high value that investors can expect, huge swings up and down. So if you are interested in this stock and you get to know it, we always recommend buying in thirds, taking an initial position, and then building it out over time as you see the company go along. But from what I've seen, I totally understand why Wall Street is very excited about this business.
Yeah, so a lot to like here, but with volatility, not for the faint of heart. So starter position may be the way to go with this particular company.